So you just mentioned headlines there, and obviously they do tell one story, but what did the actual data reveal about Dubai's real estate performance?
It's incredibly healthy, right? Record transactions, right? 215,000 transactions happened in Dubai. About 94% of those residential. That volume's never been done in the city, right? If you went back to pre-COVID, the whole country didn't have that many sales in a year across all Emirates. And we've seen that growth, steady growth, year on year on year.
Hello, Zhann.
Got the wine.
God, you're fine. How you
doing?
I was trying to think, is it 5, 6? Well, 5 maybe.
Yeah.
Welcome to Property Talk from Louise's Lounge. On today's episode, we have Zhann Jochinke, who is the Chief Operating Officer at Property Monitor. Welcome back, Zhann.
Great to be back. I've lost count of how many we've done. It's great to see the podcast growing.
We were saying that. We were like, is this your 5th time, 6th time? You're our most reoccurring.
Oh, I love it. Thank you. Thanks for having me.
But it's to talk about all things statistics, and you are the data king of all things in real estate.
Lovely. Let's jump into it. What are you going to throw at me this year?
Let's throw. I've got lots and lots of questions to get through. So obviously we're at the start of 2026. We normally have you after H1, but we've kind of let the full year run in 2025. So let's have a look. When we look back at 2025, purely through the data, how would you summarize the year in one sentence?
Oh, one sentence. If we look purely at data and ignore the headlines, refreshingly boring.
Okay. I wasn't expecting that.
Refreshingly boring.
Okay.
It was a lot of the same again, right? There wasn't a lot big that happened, honestly. There were a lot of records, don't get me wrong, right? Every month, except I think one, were record transaction months. Price growth was going a little bit stronger, but started to slow down a little bit. And then the last couple of months looked to plateau a bit. There's a lot of signs that are coming in for some stability and some moderation in the market. So for me, if you look at that stability is boring, but boring is healthy.
Yeah. It's not a bad thing, is it, to have that sort of calmness in the market?
We don't want to see the market keep running away, right? We're in that long upward cycle right now, longer than our previous upward cycles, which is good. We don't know when it's going to end. I'm sure today we'll talk about some triggers and things to look for with it, but seeing prices run away is what we don't want. It's what causes the markets to sort of get a little too overheated and then experience bubbles and crashes where we don't want that. We want to see more of a shift or a moderate correction to the market that's not the doomsday scenario that some people think or that it could be.
Yeah, absolutely. So you just mentioned headlines there, and obviously they do tell one story, but what did the actual data reveal about Dubai's real estate performance in 2025?
It's incredibly healthy, right? Record transactions, right? 215,000 transactions happened in Dubai. About 94% of those residential. Right? That volume's never been done in the city, right? If you went back to pre-COVID, the whole country didn't have that many sales in a year across all Emirates. And we've seen that growth, steady growth, year on year on year. What it's being driven by is diverging. It's definitely swung more towards off-plan now. Probably out of those 215,000 sales, about 35% have been in the ready market, the rest being for off-plan projects.
Absolutely. So were there any surprises in the numbers, areas, segments that performed a little bit differently from public perception?
Yeah. So I think what we've seen is there's a divergence between the two markets, right? Dubai is definitely a two-market city right now, and then multiple markets within those based on communities. And by the two markets, I mean the off-plan market and then the ready market. The ready market, we've seen sort of villa and townhouse, single and families largely plateau the values. You're not seeing the aggressive price increase. You might see them on listings, but not in transactions, right? That last sale that was X going and the next one trying to be 10% more. That's not happening anymore. Now you're seeing more single digit stuff there, unless there's a big renovation or something. So that was kind of a welcome surprise. I wouldn't say necessarily a surprise, but welcome nonetheless, that we're seeing that sort of not get too aggressive and running away. There's also a lot more limited supply in there, which normally would drive prices up in itself. But I think people have seen over the last 5 years the growth that have happened, and they're sort of pumping the brakes a little bit, going, yeah, we know it could get overheated if we're going too high. The apartment segment is slowly feeling the same way. The off-plan segment, I am surprised by the number of launches. I knew that it would be strong.
We thought last year, I think we kind of said it might slow down, but you're seeing even...
It hasn't. We're still crunching some year-end numbers. It's probably going to work out to about 165 to 175,000 new residential units were launched in 2025.
How does that compare to 2024 if somebody's looking like year on
So it's
year?
about 140 or so previous, and then the year before that, about 100,000, year before that, significantly less. So it's still going. The number of new developers coming into the market is still going. I always, whenever I do a panel or a discussion, I'm like, all right, drive down Sheikh Zayed Road. Tell me how many real estate billboards are not for developers. And most people go, I don't know, 10%. All right, it's about right, 10%. Of the balance, the 90% that are developers, how many do you not even know about 12 months ago? That's probably half of them. So which is great, right? We've got all this new investment activity coming in from developers coming into the market. It's about 40% increase on new developers to the market that weren't here before, year on year. And about
I didn't realise it was that high, 40% new developers.
Yeah.
Wow, okay.
Yeah, so we've got right now with projects that are active under construction, probably about 350 odd, maybe a little bit higher, that have projects under construction. Last year alone, there was about, say, 240 to 250 developers that had projects that launched.
Yeah, it's a big increase. So what shifts have you seen in the buyer behaviour during 2025, maybe compared to previous years?
Yeah, I think that the buyer in general has got a little more savvy. They're asking more questions. They're looking at more data.
Noticed that, yeah. They know a lot. They're looking at...
which is a great thing, especially if you're a business, because now it gives brokerages and their brokers an edge when they know their stuff, like when they're educated. The fact that data is available to consumers at a certain level right now, they can dig into it. If someone lives in a building, they know everything that's happening in there. It stops the brokers that are sort of uneducated in the market and pulls them back a bit and separates the cream, right?
I agree. It's pulling our standards up, which is not
exactly, which is great for the industry as well.
Absolutely.
But buyers being more selective in all markets. So we talked briefly about sort of how they're sort of self-looking at prices for single family, not letting it run away too much. On off-plan, I think they're being much more comparison shopping now. With the exception of some really tier one developers. I mean, if EMA launches something, it's EMA, there's trust, there's history, their product's good, right? There's a lot of things there, but they're not price shopping, but they're looking across the developments and going, well, what really makes sense? Because there are a lot of options.
They have more choice.
The choice is abundant. And with more and more developers coming in and more projects, but they're not all differentiated much is the problem. You're seeing a lot of, and they're the ones that may face some struggles or are already facing some struggles where there's nothing unique about them and it's a little too cookie cutter. There's no USP per se for it. So a little bit more selective, looking at data more, overall more educated. And probably one of the more surprising ones is mortgage activity.
Okay.
Which has surprised me since COVID as well, is that we've seen interest rates go up in the same period of time. Normally you'd see mortgage volumes decline, higher interest rates, less people borrowing. Ours have gone up. I don't know anywhere in the world that has grown, right? We've seen that continue to grow, and now rates coming down, it just keeps spurring it. We're probably also going to see refinancing activity now. Those that took loans and now that fixed rate is resetting. You'll start to see another wave of refi activity coming in. So the mortgage market is one that's really surprised me to an extent, and I think it's going to go from strength to strength.
Yeah, it's going to keep increasing. So do the numbers suggest that Dubai is moving into a more mature, stable market phase? And what are the indicators that are supporting that?
There's mixed indicators on it. In the ready market, yes, it is. It's moving into that. In the off-plan market, there's still some healthy and unhealthy in some ways speculation that we're seeing, but there are also signs that some of that speculation might be pulling back. So it is maturing at different paces in different segments. I think it will continue to mature. You've got a wave of people that have invested in Dubai before, they know what they're doing, but there's also a wave of new ones coming in that might get caught up in the sales hype and the glitz and glam that we all love. It's just, we have to see where those projects come in and how things are going to be. So overall, yeah, evolving, maturing. There's still a ways to go, but we're a long way ahead of where we were previous market cycle.
Absolutely. And supply is always a hot topic. What did 2025 data tell us about the absorption rate and the demand?
So again, I'll split to two markets. Completed ready, absorption rate was high, right, if they were priced right. Right? It always comes back to pricing. Those that were priced right, things were flying off the shelves, very low days on market. in the off-plan segment, it started to really paint a different picture as the year went on. Whereas some developers would launch and tier ones might sell out in 90% of their inventory within the first month. Now we're seeing some of those tier ones not sell out 90% in the first month. It's maybe taking them 2 or 3 months, which was kind of a flag for me. Also seeing some developers newer to the market where they're having to offer a lot more incentives to drive their sales. So at the higher commissions to the brokers, which shouldn't drive it, but it does. More incentives to the buyers, post-handover payment plans. Specifically on absorption though, there are a lot of units that haven't sold, right? So if we just look at the launches from last year, so that 165, 170,000 or so, half that, just look at the first half of it because we know they take time to get registered. So say roughly 80,000 units. Of those, the absorption rate in developers that are sitting on unsold inventory just from last year is growing. Right? Okay. Some developers have units on their books from projects that were launched a year ago, 2 years ago still. And then
is that a slowdown in demand or is it an increase in supply?
Because if we're seeing it's definitely an increase in supply because we're seeing that huge amount of sales volumes every month. Things are selling. Buyers want to buy, be they investors or end users that couldn't find a ready property. So the demand's there. I think because there's so much supply, and then what I said previously about lack of differentiation sometimes or USP is starting to take a toll. We've also seen that you've got people that bought speculatively, just wanting to flip, and they're not being able to. So most off-plan resales we're seeing for projects are within 12 months of completion, which is healthy and natural.
Absolutely.
That started to creep up to 15, 18 months. And it started to get to a point where off-plan resales activity was about over 33% of monthly resale activity. That's a record high from all the numbers. There's no magic number, by the way, but that's where it went up to. And
that's a lot, though. A third of the investors want to sell out in that short space of time.
Yeah, I mean, and close to handover, it's fine because that's when you're starting to see the premium actually materialize because you can almost touch, feel it, move in, especially when there's a lack of some of these properties in the ready space. So consumers are like, yep, I'm happy to pay that, lock it in now. Yeah, it's higher than the original purchase price, but I can lock it in now. I've got a place to move next year when my lease is done, whatnot. Then we started to see it drop significantly. It's dropped down now to the very low 20s, even with under 20% of monthly resale activity being for off-plan. And if we look at what's listed for sale, it's the off-plan inventory for resale is increasing. The ones that aren't moving are the ones where developers still have their own unsold inventory. So as a buyer, who are you going to buy from? Are you going to buy from a developer at their price and then probably get flooded with some incentives because they want to sell that project out? They're going to probably give a little healthier discount, a better payment plan, give you some more option to move theirs. Or are you going to buy in the resale market, someone looking for a premium? Well, that's straight away gone out the window because developer's better. Unless it's at below OP, there's no incentive to buy it.
What's the incentive otherwise? Yeah.
So there's that dynamic and it's continuing. Right, where I think that's going to be a rude awakening for some people. Some people that bought, maybe thinking that they could sell before the next payment due, not even handover, and maybe they didn't even have the funds to see it through to handover. That's a very risky activity, and to me, if they get burnt, that's their own fault.
Yeah. It's the when we talked about the buyers, the behaviour, and the education actually being it for the longer term rather than being the speculative investors.
But look, you do get some of it is to blame some brokers who are very good salespeople, but they shouldn't be encouraging someone, don't worry about not having all the money, right? It's fine to go, you could sell it before these payments are due, but as an investor, they should always have the plan B to see it through. What if I don't? Can I manage this? Because the last thing you want to do is default and then lose the money you've put in.
Absolutely. So from a data perspective, how would you describe price movement in 2025? Growth, stabilization, recalibration?
Yeah. Refreshingly boring.
Same old.
No, but and for me again, it's healthy now, right? So 2024, we saw annual price growth of about 15.5%. 2025, we saw 11.5%. It's a very happy number for me. When we're seeing single-digit growth, like 1% and less on average, is healthy. That's growth that's not really running away. So seeing that around 12% per annum is good. Seeing 20% is
that scares you,
especially if it's year after year. And we were trending sort of 15, 16, 15. And now to see it start to slow down a bit, a little bit of moderation is healthy. The last couple of months of the year were actually negative, but we're talking by 0.13%, 0. Something like tiny stuff. It could be, if we see that for the next few months coming in, bear in mind that a lot of those changes are from transactions that were probably decided in September, October, and it's transferring.
There's a delay in that information.
If we see this continue for, say, the next 2 to 3 months into Q1, it could indicate that we have reached the peak of the market. Right now, I wouldn't say we have. I'd say there's still potential for growth that's in there, but if we see that trend continue, and even if it ticks down, not a bad thing. Even if you're an investor that has something and you want to sell it, it's fine. Still a good time to sell. If it starts to rapidly drop, that's when we've got problems. I don't see that happening in 2026 unless there's a massive global financial crisis or a COVID event or something like that. We may see some downwards price pressures that are more significant as we go into 2027.
Yeah. So talking about 26, what signals should people watch for to understand if the price is staying stable rather than speculative? What should they look out for?
So I definitely look at, there's several things. In the off-plan market, keep an eye on those off-plan resales. If that number is able to tick up, that could be one of the flags that are in there. Keep an eye on the absorption rates we spoke about before. How quickly is both markets being absorbed, off-plan and ready in there? And just seeing, is this normal behavior? Are there sudden peaks or other things in there? And work with someone that can actually help you understand those peaks. Don't just look at the market as an average. We publish stuff at a Dubai level because we're a commercial business. We want to keep some stuff for our paid subscribers, but also the report would be 300 pages long if we covered all the communities in the market.
To decide for that. Yeah.
So to speak with someone that knows that community, knows that building, and that can dig in more and give the right advice with it, I think that's one of the key things for any buyer to look at or seller to look at.
Ask the questions.
Ask the questions. Don't be afraid to ask them, and don't be afraid to ask them from more than one source. Right? It's fact checking there. If it sounds too good to be true,
it probably is.
Chances are.
That's my life quote, actually.
That's a good one.
Stick to that. So based on the numbers, who was really driving transactions in 2025? The investors, the end user? I know we've talked about the sales stats, but was it a mixture? Who was really driving it?
So it's still very investor-led, but there are more end users buying off-plan as well. In the ready space, it's mainly end user-led right now, especially where the prices are. Investors don't really jump in at these prices unless they're a Western buy and flip, and by that what I mean is buy, renovate, flip. You did have investors jump into that space. In the off-plan market, though, there's been a big jump in end-user activity, and we get this not necessarily just from the data, but anecdotally from the developers we speak to as well. They'll share that with us, and most of them are buying because they can't find in the ready market. So they're like, buy it now, lock it in. I know what I'm doing in 12, 18, 24 months, whenever it's going to hand over.
They're thinking ahead to get what they want.
Yeah, so there is some healthy end user activity in there, but there is still a lot of investor activity, and then there is a chunk of speculative activity within that as well.
Okay, and hopefully that speculative will slow down just
It's going to slow down. Oh, look, it's fine to have it. I always come off as being very negative against speculation. It's fine to speculate on any investment. Just know your risks going in and have the plan B, right? Just don't get yourself caught.
Yeah, absolutely. So did the data reveal any notable trends in cash buyers versus mortgage buyers? Yeah. So we talked about mortgage activity a little bit already. Mortgage activity ticked up. The percentage of properties that were actually bought with a mortgage also ticked up. Again, in a high interest rate environment. The demand is there, yeah.
So it was about, transactions that had a mortgage on them, sales transactions in the same month that had a mortgage on the property, it was about 38%.
Yeah, that is high.
It's high. It's Western standards high, right? The year before, it was low 30s, 31, 32%. Year before that, it was closer to 22, 23%. So you've seen it grow, which is, this is a very, very good sign. We want mortgage activity by end users in the properties that they're buying. That's a healthy, stable dynamic to see.
Long-term entry and
Yeah, and that means they're planting roots. Most people aren't, look, even though you might take a 3-year fix, you're not buying a home to only live in 3 years. You're thinking probably double that at least, or at least it signals that you're looking to plant roots in Dubai, and Dubai being less of a transient city. Also seeing it more in larger properties. For me, that now indicates families. So if you're buying a property here and the family is here, you're really starting to plant roots in the community, and that's ultimately healthy for Dubai and long-term for Dubai.
Yeah, and Dubai is very family-focused now. For the longevity, the golden visas, all the
everything's been geared around it.
Yeah.
I think there's a lot of strategy that goes into this city, and I think they've taken it from the beginning of building it and a hardship post and a lot of things, and then to it becoming an evolution running through market cycles, to attracting events, to attracting families, to attracting businesses. So overall, from a government standpoint, there's a lot of drivers and levers that get pulled to help continue things going in the right way.
It'd be really interesting to see maybe H2 of this year, as you say, it was already going up with the mortgage buyers, but now the interest rates have lowered. Is that another entry point for people, more affordable?
It'll keep driving it because interest rates drop, becomes more affordable. One of the other real interesting things about mortgages is, so there was a change to policy throughout the year. Well, the policy was always there, it just wasn't enforced. You weren't supposed to be financing the fees that come with it. You were just supposed to be financing purchase price. And the central bank basically issued a memo going, banks, you can no longer give extra money to finance commissions, DOD transfer fees, so on. They pulled that back. It had an impact. It just changed the LTV. Right? So whereas average LTV was probably around 76% before, it's now closer to 72, 73%. So that has come down, and if you run those numbers, it's pretty much coming down by the same amount that the fees would have been. But it hasn't stopped borrowing. It's just made buyers have obviously got liquidity and cash elsewhere that can cover them, so they've made it happen. But it's less being borrowed against. So kudos to central bank. They did something that's there and it didn't crash the market. It's probably just given a little bit more stability to it should something in the future happen.
Yeah, absolutely. And sometimes it's not a bad thing, is it, to actually reduce that LTV more for affordability levels? Especially
when prices are increasing, right? Because there's always that fear. If you're lending 75% and the market goes down by 30%, now there's no equity. So, and the consumer doesn't want that, and the bank definitely doesn't want that.
So if you had to highlight 3 data-led signals from 2025 that is going to shape 2026, we're going to crystal ball time.
I love my crystal ball.
I know.
Time for a bit of water before that one.
We always put you on the spot. I know nobody has a crystal ball, but obviously just looking at the data, what does that indicate what 2026 is going to be like?
I'm a transaction volume person rather than a transaction value. Right? Because the values, you get wealthy people that can skew those averages and everything. So I'd never like to look at X billion in transactions. So we're doing about 17,000 transactions a month from the last 12 months. If we start to see sharp drops from that and then it continue to go down, that would be a flag that I'd look at. That is definitely saying that there is either a decline in interest or prices have gotten too high so people can't get into the market. So transaction volumes, it's fine month to month because there are lags with registrations and sometimes you might get a big launch. Damac Islands too, right? They've pretty much sold out like 8,000 units within a week, right? So they're all going to register in clumps in the next couple of months. It will probably boost transactions to 22, 23,000, and then they'll drop down to 17. That's not the thing I'm talking about. I'm talking about not massive ones that are in there, but across the board seeing, all right, we're seeing less and less. So transaction volume is definitely one, but digging deeper into it. Sudden price jumps, and then also digging into them. If we see 2%, 3% month-to-month price appreciation, that's a huge red flag for me. If it's 1 month isolated, maybe, but you really shouldn't see it like that. So any sudden fluctuations in there. And then one outside of actually real estate would be the job market, right? It's great, population numbers are growing, but at the end of the day, people need money to be here. Not everyone is coming here to live
holiday, to lifestyle. We all want that lifestyle.
The job market needs to remain strong. So some of those other and more macro things to look at outside of just the real estate market.
Absolutely. So are there any areas, segments or behaviours that data suggests people should pay more close attention to? Maybe you've covered that.
Yeah, I mean, we've touched on some of that. I mean, the off-plan resales is a huge one to look at. The percentage of those, that speculative activity that's in there. I think that's a major one that I'd be honing in on.
So if investors and end users listening to the podcast, what's the biggest mistake people make when they don't look at data properly?
They overpay.
They buy the wrong property.
They buy the wrong. If they look at headlines and they don't look at the data and they don't dig in or they don't speak with someone, they're buying off just someone's opinion, right? Data tells the story behind the opinion. You're almost buying blind. It's easy to get caught up in flashy developer marketing material and see how great Dubai has done over the years. Legitimately has done great. But you have to understand the market cycle, understand the communities, understand that there are two different markets happening and that there are sub-markets. Every community is different. And every building in a community is different. We're in Dubai Hills right now. Right? There are vast majority built by EMA. There's also third-party developers. EMA properties will probably outperform some of those third-party developers. So it's not just, Dubai Hills is great, but you have to dig down a little bit more.
Yeah. It's looking under the surface. Everything looks shiny and new, but you've got to stop the emotional and actually go into the logical side.
Yeah, you've got to pause. Look, especially if you're buying for end use, it's emotional.
Yeah, it is.
As much as we don't want to sometimes admit it, it is. And you can get caught up in that. You can get caught up in bidding wars and other things as well, but always take a moment to reflect. On the off-plan space as well, it's great to invest in there. And there will be highs and lows. Just never get to a point where, have that plan B. Don't get to a point where if this doesn't happen towards your expectations, then I'm stuck with this. Or if you're being told things are going to yield this in the future, well, no one knows that.
We can't predict.
We don't know what rents are going to be next month. We don't know what the rent index is going to do and other things. Have that there. Be prepared to maybe be a longer term landlord or to be happy with a lower rent and a lower yield. Just have those multiple plans so that you're not caught unawares.
It's managing your own expectations, isn't it? This may happen, but if it doesn't, this may happen.
Exactly. I mean, no one has the crystal ball. We can look at what's happened before and it's a good indicator of what can happen in the future, but it doesn't always pan out that way.
Absolutely. So one insight from data of 2025 that should guide smarter decisions in 2026, what would it be?
That we are seeing some moderation in the market. We are seeing, whilst volumes are strong, we are seeing in different areas prices plateau, level out. We are seeing absorption rates in some slow down or alter. It's to look at those as granularly as possible. Look by developer, right? If the big developers, like I mentioned, their absorption rate takes a little bit longer, or the sales velocity is a bit longer, it's not necessarily a bad thing. If that case stays consistent, so the example I gave was tier one developer, great project, selling 90% within the first month. And now it's probably closer, they sell 90% within 3 months. Okay, if that continues and it's 3 months, that's just the new norm. But if that continues to go 3 months, 4 months, 5 months to reach that 90% absorption, that's a flag to look at in there.
Yeah, changes in the slowdown in the market. So thank you very much, Zhann. As always, very interesting and
always a pleasure. We have a great time. I mean, maybe we look at H2, see how it performed, or next year-on-year growth.
It's like bring you back a bit earlier each time, I think, just to see the market changes. Because I, for one, clients, I'll wait. The prices are going to drop. But they've actually been saying that for the last couple of years.
And I've been thinking it, and a lot of analysts as well have been saying it too. We've looked at the market cycle, we've looked at things there, but Dubai remains, it still pulls people in. And if population growth and jobs are there, it can keep continuing. It won't go on indefinitely. Is it a great time to buy right now? Depends what you're buying, depends what you're buying for. Is it a great time to sell? It depends what you paid and when, right? If you sell today, you know what you've made, right? Prices continue up another 5%, 10%, 20%, but you lock in what you know today. Prices could turn in 6 months and start to go down, and now you're chasing the market down. So it's still a great time to buy. It's a great time to sell if you want security and lock in what you've made. The rental market we haven't talked about. I think we'll see some dynamics to that towards the end of the year and definitely in 27. Once we see handovers really start rolling in into all these projects, that's when we'll start to see the market have its next evolution, whether it's further growth or potential decline, a shift, more to come.
So it might be interesting, not boring, refreshingly boring, or boring, refreshingly. It might be interesting.
When I write a monthly market report and it's basically saying the same thing, yes, record sales transactions, prices have gone up. It's kind of fine. I want to find something that's there. Right? So give us a change.
So we can watch and analyse and see what's actually happening in the market. Same old, same old. So thank you as always, Zhann. And let's get you on again soon.
Great.
And,
looking forward to it.
Thank you.
Here's a good 26.
Yeah, it's good 2026. Thank you for tuning in to Property Talk from Louise's Lounge. And as always, if you've got any questions, please get in touch with us, or suggestions for future topics that you'd like to see us cover, please do let us know. Thank you.